All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you today, and I hope you guys are having a good Christmas Eve and tomorrow as well. Probably won't make a video as it is Christmas, but again, keep on hodling through the holidays. And I hope you guys have a good one. But for now, let's hop right into it. Cryptocurrencies could be the #1 asset class in 2019. So crypto has never existed during a bear market in traditional assets. Bitcoin has been birthed at the very beginning of the largest monetary experiment ever, globally coordinated quantitative easing. That QE sauce. Ending QE is causing pain. There is a significant chance crypto is the best performing asset class in 2019. So now we kind of thought this was going to be the case in 2018, although that definitely wasn't the case at all. But we all huddled through it, and everything is going to be just fine. I'm not worried about the price. You shouldn't be worried about the price either. Nobody's worried about the price. During a recent article, many crypto industry experts share Kling's sentiment about cryptocurrencies becoming the best performing asset class in 2019. And they argue that developers have improved the infrastructure of cryptocurrencies and blockchain during 2018, which is basically the only thing that happened in 2018. And while the market has fallen, the outlook is better than ever. And it's very interesting that cryptocurrencies are on the rise while stock market is crumbling and is close to entering a bear market. So Kling stated that Nakamoto created Bitcoin during a time when the world coordinated quantitative easing. It means lowering interest rates and buying trillions of dollars worth of government bonds and mortgage-backed securities. And the move potentially saved the U.S. and the world from major depression. Other global economies followed suit in buying bonds and increasing market liquidity to fuel economic growth. And Bloomberg revealed in October 2018 that the world's largest banks have started to decline their bond holdings, and the U.S. is leading the way, and they're rising interest rates as well as allowing economies to operate by themselves without intervention from central banks. Cryptocurrencies and blockchain emerged just after the last bear market and have not been active during a recession. So Kling argues that the instability of the stock market has affected the cryptocurrency market. However, he thinks that cryptocurrencies might find a bottom before the stock market does, and it would make complete sense to me that crypto would bottom out months before traditional asset classes. So this is very interesting that NASDAQ and the stock market overall is greater than 18% in decline. And once it reaches 20%, that's when the stock market is considered in a bear market. And so Bitcoin was created in 2009, right at the end of the housing crisis of the 2008 economic crisis. So it's true, Bitcoin has never really seen a true economic crisis. It was birthed from that. And at first, no institutional investor would ever consider Bitcoin because when it first came out, it was quite mysterious that it was this internet money that you would mine on your machine and be able to use as internet money, and nobody really took it too seriously. So everybody was investing in the stock market and gold, silver, everything like that when the prices were going up. And it's been about 10 years, so it's about that time that the stock market starts to go back down, especially with the quantitative easing going away. And again, as it said in the article, that no longer intervention from central banks, so that means banks are just going to start doing their own thing again, and that's basically what caused the 2008 crisis, along with a few other things. But so they're going to be back at it again. And it's also interesting to see that Bitcoin was, crypto in general, a bear market for a year. And a lot of people agree that we pretty much reached the bottom there at about 3,000, 3,200, and that it likely won't go below that. But it is crypto, the Wild West, so who knows. But we are on our way up. So it would make sense that if the stock market is on the way down, why not sell, cut your losses, and then move over to crypto where it's going up? So I think a lot of money is about to go into crypto fairly soon here. So I think 2019 will be a bull market. But again, a lot of people thought that 2018 would be as well after the all-time high of crypto there. So we'll have to see what happens with all that, but very interesting. So proof of keys is coming, but what is it? So Trace Mayer is now promoting a crypto ownership of awareness event called Proof of Keys. In the event, cryptocurrency holders are urged to remove their crypto assets from exchanges and other third parties in an effort to prove solvency. So this event will take place on January 3rd, 2019, and there is actually quite a bit of positive outlook on this. If you go into any Reddits or forums or anything like that, people are actually pretty positive about this and are willing to take part in this. So basically, the idea is on January 3rd, you should take all of your crypto off of an exchange or wherever you have it and hold it yourself. Hold your own private keys and basically learn how to hold your own private keys. Maybe make like a paper wallet or put it on a thumb drive or a nano or something like that. Just keep them off of an exchange, and that's pretty good. It's a pretty good idea and a pretty good learning tool. However, I feel that there's going to be a few bad things about this. So there are some doubts against the event. I'll read that first. I'll go into what I think about it. There could be a potential problem with this event. However, exchanges like Binance, for example, do not hold all customer assets on the exchange at one point. They store an amount of those funds in cold storage to protect customers. Fundu Seifu. If everyone wanted to withdraw all funds in a short period of time, it would likely create significant traffic while waiting for the exchange to transfer those funds and then allow customers to withdraw them. So back when one broker was shut down by the FBI a few months ago, crypto traders flocked to one broker's sister site, One Fox Exchange, to withdraw all their Bitcoin in fear of a related shutdown, which caused hours of delay. And actively trading crypto assets can also often require an amount of funds to remain on exchanges. So in theory, this could basically make trading inoperable until all transfers were sorted out and sent back. So again, this is a really good idea in some ways to make people learn how to hold on to their own crypto and not just put it on an exchange where it's much more safe in your hands in general. Now, the bad things I can see about this is a lot of people are going to end up losing their crypto. A lot of people are going to lose their crypto. Period. There's going to be a lot of people that mess up the process in some way, shape, or form. And that is, I think, an inherent problem in crypto in the first place, that you can just simply lose your crypto. You can't really do that with money except for bills, I guess actual like dollar bills that you could technically lose. But, with your bank account, you can't lose your money. With crypto, you definitely can if you do it the wrong way. Forget your private key, lose something. And that could be a problem for a lot of people. Another thing is again, as it said, that if you're a day trader, you have to have your funds on an exchange. You can't just take your funds off and put them on all the time, or you're going to end up losing over time a lot of fees for those transfers. And then also, it's going to slow down transfers quite a bit. There are some things wrong with this. Again, it said in the article as well that, if everybody takes off their crypto from exchanges, or at least a lot of people do, it's going to be a lot less volume, a lot less trading, and a lot, maybe sort of a stagnation of volume on exchanges. Another thing too is that all of the people taking Bitcoin off of exchanges will result in a lot of money going to miners, because of all the fees, all the transfer fees will end up going right to miners. So I almost think that Trace Mayer here is a huge Bitcoin miner and has like tons of like ant miners or something like that, or ASICs in general. And by everybody moving all of their Bitcoin at once like this, it's going to cause a massive increase in miner fees and miner rewards. But I suppose it probably wouldn't give him that much, even if he was a gigantic miner. But still, there are some issues with this. But overall, I support the idea. But just make sure you transfer your funds properly. So moving on, could President Trump be setting up the next big Bitcoin rally? Big question mark, but either way, take your pick. Perhaps the scene was set by the announcement of Bitcoin proponent Mick Mulvaney as his acting chief of staff, who will at the same time continue his role as Trump's budget director. Then, of course, there is Trump's ongoing war of words with the Federal Reserve. Last week's quarter point rise in interest rates added fuel to the fire and spooked the markets. Trump caused further alarm with the suggestion that he wanted to fire the Fed chairman, until he realized that he couldn't, because there's no clue what he's doing. He's never been in politics. There's no clue what he's doing. Oh, it's so funny, though. Still, Trump has been a vocal critic of Fed policy as of late. and the Federal Reserve as a whole calling it the only problem with the economy. Trump believes the Fed is out of touch with the markets as the current tapering of QE could bring about another recession, if not worse. And what's more, Treasury Secretary Steve Mnuchin even went as far as calling the CEOs of the nation's six largest banks to check that they had sufficient liquidity, though he may have inadvertently caused a sore of panic he was trying to avoid. Relative to the world's biggest currency, the Fed's monetary easing is seen as a positive for hard money like Bitcoin, as inflating the money supply should, at least in theory, boost Bitcoin price in US dollar terms moving forward. And then there's the small matter of a government shutdown. Meanwhile, the president has dug in his heels and closed down the government during Democrats wouldn't give him $5 billion to build a wall. Mulvaney said that this situation may continue beyond the current projection of 28th December and last Congress reconvenes in January. And last until Congress reconvenes, anyway. And I don't know if you guys have seen it or not, but there was a GoFundMe to build the wall, and it's already like accumulated like $100 million or something like that to help build the border wall, which I don't. Whatever. That would be the new Congress reconvening with a Democrat majority, meaning a likely roadblock for wall funding. President Trump has simply said that this standoff could go on for a very long time. In other words, economic instability, potential bank failures, and political uncertainty. So as Wall Street veteran Max Keiser said in his recent Bitcoinist interview, Bitcoin adoption has always been driven by bank failures, bailouts, bail-ins, and political unrest. Therefore, it's no surprise that some investors and money managers are seeing this tug of war between the Fed and Trump as a net positive for Bitcoin. Trump might be setting up a huge Bitcoin rally. That is what it was made for, just saying. A fund manager, Ross Gerber. Crypto is not dead. Haven't sold mine and not going to. So whatever your feelings on Trump, Bitcoin, or anything else, Gerber certainly drew a line in the sand. And the Twitterverse queued up to stand either side of that line and sling tinsel wrap mud at each other in a traditional pre-Christmas banter match. So with all of this issue going on, it's just going to create a lot more sentiment against the dollar, against fiat, period, and maybe more people will buy Bitcoin. So I think the article title is a little misleading. Could Trump be setting up the next Bitcoin rally? So Trump really didn't really mention Bitcoin, essentially. But I think just like him messing everything up so badly, and it's really not all just Trump too. So everybody's like, oh, Trump caused the crash of the stock market. No, the Federal Reserve did by raising interest rates. So which really has nothing to do with the president, because they don't even really interact very much, and the Federal Reserve just does what the Federal Reserve wants to do. So either way, I think all of this crisis could lead to better prices for Bitcoin. So Bitcoin privately pre-mined 2 million coins for its founders. Oh my. So Bitcoin Private, a so-called fork merge of Bitcoin and Z Classic blockchains, fell 20% after research group Coinmetrics published the information Sunday. After analyzing the Bitcoin Private blockchain, the company claims it became apparent that an extra 2.04 million coins were mined during its genesis, likely unknown to miners, users, and perhaps most developers. Known as a covert pre-mine, the tokens were stored in a shielded pool. 300,000 units of a covert pre-mine were moved out of the shielded pool towards what appeared to be exchanges. A summary of the investigation continues. Ultimately, the lack of uptake of Bitcoin Private by the recipients of the airdrop mean that those additional 300K transparent units today represent close to 10% of the total of the BTCP supply in circulation, with 1.80 million covertly minted units remaining in the shielded pool. So the response from developers and creator Rhett Creighton, who also led the formation of Z Classic from Zcash, differed. Creighton was the first to respond to Coinmetrics rating on Twitter. He thought Bitcoin Private had suffered a covert inflation attack. Afterwards, operations led Jake Brutman conversely suggested Creighton personally sanctioned the 300,000 token deployment. This was some of the earliest code work done, he said. From my recollection, it was a bounty placed by Rhett, and the code was merged by Rhett when he was acting as lead developer. In an update, Creighton meanwhile said he had not been involved with Bitcoin Private project for many months. I never wrote any software for it. I was never paid or given any BTCP for free. He says, I have no knowledge of who may or may not have involved in the inflation hack. He subsequently faced calls from well-known pundits that he was a scammer and even deserved some years in prison. I don't know about that, but he certainly deserves his coin to be dumped pretty hard. So this was 2 million privately pre-mined coins that just were not a part of the circulation supply that you would see on CoinMarketCap or wherever, and basically for its investors and for its founders and stuff. Now, I don't have a really usually have a problem with pre-mining coins like a 10% or an ICO keeping 10% of their coins, just so that they could be paid. At some point, they could slowly, sell off those coins and buy some pizza, pay everybody, you know what I mean, just to live. That's just fine. I do not have a problem with that, because why would a developer just make all these coins for free, other than Satoshi Nakamoto, I guess. But I suppose you could argue either way. I mean, Bitcoin made its coins, but we don't know who Satoshi Nakamoto was, or who they are, or why they never used their coins. Most likely, the creator may have passed away, and therefore none of the coins are ever going to get used. But 2 million coins that weren't even announced that was a pre-mine, very, very scammy. So Bitcoin private, geez, every time I look at it, it's getting pumped and dumped, and now 2 million scammed coins. So, next article is, never mind the bears, 2018 was a rude awakening crypto needed. So 2018 was a wake-up call, a rude awakening from the dreamlike bull run of 2017, where shady entities could raise 30 million with an idea, a white paper, and a website. And welcome to reality. Fiat still rules, investors want returns, and the government can easily impose regulations to scare off investors. Unlike the financial world, however, there are no government bailouts. Ironically, also unlike the financial world, many people will go to prison for fraud, scams, and even crimes defined by archaic laws that should not apply to this new asset class. Decentralization, a word that we throw around ever so often now. It's a very powerful, dangerous technology. We also have become so desensitized to the world, its potential implications for the future of the world, that most people forget how this entire blockchain industry was incepted. A single powerful white paper gave birth to this movement. And I would agree, there were some white papers before that as well, but we'll forget about that. No one thought that it was going to be easy or quickly met with mainstream adoption, and decentralization is in essence a proxy war against the government, the oppressive financial systems, and irresponsible or greedy corporations. And Satoshi Nakamoto, Bitcoin's creators, I like how they put creators, very clever, knew the dangers and risks that it could bestow upon his livelihood and family. Could he really blame him for remaining anonymous? So I was reading some things about Satoshi Nakamoto the other day too, and I was thinking about making a video of sort of the history of Bitcoin and Satoshi Nakamoto a little bit more. And one of the reasons that somebody was thinking that Satoshi Nakamoto was anonymous is the whole Silk Road deal. So, Satoshi Nakamoto went quiet about 2011, when the Silk Road was really starting to start to take some flack. And if Satoshi Nakamoto was one person or even a group of people, they would probably fear repercussions from that. If they had created this coin that was used for so many illegal activities, could they be charged as well? Could they be considered a fraud or scammers by the government? Could they have to give money back in some way, shape, or form? There could be some kind of repercussions. I don't know what money. But either way, it's probably best that Satoshi was always anonymous. Because imagine if we knew who Satoshi was now, even though I'm really curious to know who it was, and I would love to know. But imagine if he was just always open. I think Bitcoin would be a totally different place. They would expect Satoshi to make changes. They would expect him to do all these different things, to be a spokesperson, to go to conferences, this, that, and the other thing. He'd be bombarded with emails, talks, people calling him, people trying to get interviews with him, all the things like that. And honestly, that sounds kind of like a pain in the ass. And also, going anonymous like that is probably a good thing too, because who knew that Bitcoin would explode like this? I think that Satoshi Nakamoto did not realize of how explosive Bitcoin would be. I think he thought that it was going to be sort of an underground, mediocre popularity, where only cypherpunks and people like that would use Bitcoin. And that's pretty clear because of the small block size. I don't think in advance that Satoshi knew that if Bitcoin would be used so much and stress tested so much that people were using it all over the world and just so many transactions were occurring that it would sort of back up the transactions and cause massive fees. that would go back to the miners. So he knew that the fees would go back to the miners. But very interesting to think that maybe Bitcoin wasn't as well thought out as we all thought it was. And of course, mind you, it's totally genius. The block explorer and Bitcoin itself, and the algorithm, and the fact that it goes back to miners, and the fact that Bitcoin has never had any errors, except for the one, I think, in 2011 or 10, where like 2 million Bitcoin were created out of thin air, but then that was reversed essentially and fixed. But for the most part, it's absolutely flawless software, aside from the fact that it wasn't thought out for the future, in the sense that the blocks are extremely small, and you can't have a worldwide transaction rate with Bitcoin, because the blocks are so small, and the way it's decentralized, it just doesn't work that fast. But perhaps he knew that as well. Who knows? Very interesting to think about. But 2017 was more harm than good. The truth is, 2017 was absolutely unwarranted, and I'm talking about Bitcoin because there's one thing that was unwarranted. It's the Bitcoin bull run. It's simply how the market cycle works. And what was not warranted, however, was the ICO craze that we allowed to happen. It was irreparably harmed. The connotation that comes with three letters, ICO. People are getting creative now, PTOs, IEOs, MNOs, and everything in between, just to distance themselves from the words initial coin offering. And we sat there watching it happen, knowing well that 90% of projects would utterly fail. But how can we say anything when projects were doing 5x, 10x, 100x, and people were happy? I won't lie and say that I never had temptations to write a quick white paper and make a fancy website with trendy buzzwords and make a quick million. I also won't lie that I didn't lose a lot of money by holding, and everyone laughed and mocked Litecoin creator Charlie Lee when he sold at the top. But I wonder who's the one that's sitting comfortably now. I bet it's Charlie Lee. I don't blame him at the least. I don't know why everybody hates Charlie Lee for doing that. I don't blame him in the least. It was at the top. He told everybody this is the top. It might go to $20. It literally went to like $23. The guy was right about everything. Sell your coin when it's at the top. Don't blame another person for selling their coin when it's at the top. Sell your coin at the top. How can you blame somebody for that? Anyway, I guess because it's its own coin, I don't know, whatever. Anyway, the ICO craze just happened so fast and intense that regulators were not given an opportunity to even consider creating a new asset class for the modern world. So looking forward into 2019, price is almost irrelevant for altcoins right now. We can think of 2018 as the year those AOL CDs were airdropped into people's mailboxes. Thousands of the world's smartest cryptographers, engineers, developers, and are building the infrastructure needed for the decentralized web, the Web 3.0. And if you're trying to build a business, there's a saying, follow the money. And if you're trying to be involved with the next world-transforming technology, I like to say, follow the nerds. That's a compliment, not an insult. I like that one. 2019 is definitely be an interesting year with a lot at stake. Billions of dollars are still being pumped into blockchain. It's just not about Bitcoin anymore. The race is for mainstream adoption. Which protocol will be the next? IPv4, HTTP, SMTP, and who will build the first MySpace? Which network will blow our minds with fiber optic-like transfer speeds? And whose novel idea will one day dethrone Reddit, as it did to Dig? There doesn't have to be a single standard protocol or platform, and that's the point. And my point is that the infrastructure is now barely being laid out and tested, some obviously outperforming others. And we are deviating from a speculative market as such at fast rate, quite honestly, caught everyone off guard. And retail investors are actually performing due diligence before investing now. And what a lovely sight. For the past 6 months, we've received tens of hundreds, maybe thousands of emails requesting for projects with no working product, no experience in the blockchain, and no reason to create a token for their idea. On average, we take on less than 20% of clients seeking help after performing due diligence, and investing in less than 1% of those seeking funding. And we were blessed enough to be able to choose which projects we want to work with, thanks to all the word of mouth referrals from friends, partners, advisors, and old school networking. And we welcome the bear market with open arms because we were able to help projects achieve their goals. And through that process, we learned a lot. So I really like whoever wrote this article. The whole article is actually a really good read, but I kind of just wanted to read you the few good points there. And so if you want to read this whole article, it's just on CoinDesk. It's called Nevermind the Bears, 2018 was a rude awakening crypto needed. And Han Yoon, absolutely excellent writer. Good job, man. I enjoy your writing style. So pretty good read though. But moving on to CoinMarketCap here, we're at $138 billion. We are moving up, up, up. And so I think this is the point when the stock market is starting to go down and Bitcoin is starting to go up. But that's interesting. If the stock market goes down, Will Bitcoin and crypto succeed through that market, or will it go down with it? So nobody knows the answer to that because crypto has been in a situation of nothing for 10 years of a bull stock market, of a very robust stock market, and has yet to see a true depression in the stock market and other markets. So we'll have to see how this works. Will a depression actually mean that people take money away from those stocks and put them into Bitcoin? And will a depression mean the opposite, that everyone's going to take their money from everything and try and hold on to it? And what happens if everybody sells off most of their stock and really bombs the price of stock so that corporations start to suffer? And I don't mean as, oh no, not corporations, but if corporations are suffering, that means less jobs, less money, less creation, less products. And does that mean less money for Bitcoin? So very interesting to see what is going to happen in 2019 if the stock market continues to go downhill. But that's about all I have for you guys today. I want to ask you all to subscribe to the YouTube channel. Also, if you don't want to, if you're like, no, I don't want to subscribe, screw the subscribing. You can just hit the like button. That actually helps a lot. Just go boop on that like button. And, all my social media is in the description of the video as well. Steam, Twitter, and my Twitch. I have ceased live streaming on my YouTube page, and by the time you watch this video, I've already gotten done with my live stream for the day. So I usually live stream just about every day before I published the recorded video that I'm doing now. So usually I'll just stop this, I'll upload it, but I don't publish it, and then I go live for a few hours and talk to everybody about crypto, play some games, just community chat and stuff like that. So catch me on Twitch. That is in the link below. Give me a follow and it will give you notifications of when I do go on. But I hope you guys enjoyed this, and I hope you guys enjoy your Christmas tomorrow with your families. But that's all I have for you guys today. And as usual, I will see you guys next time.